How are you, Henrik?
I'm good, thank you, Dale. How are you?
Welcome back, my trading warrior brother. It looks like you put together some type of PowerPoint to cover different markets. So
Yeah.
take it away. I think the last time I sent you a direct message, gold was trading around 1,300. You thought that was going to be a pretty significant barrier. So why don't you just go through what your views are, and I'll probably have some questions for you as you go through it.
Sure. And thanks for having me on. So, I look at the longer term perspectives. I've just been listening in here on great people looking on the more short term perspective, but what I do is more on the longer term.
Okay.
So I think I want to start out there again, like a little what I did last time, and I think it was in August where I think we discussed a little about oil and also equities and things like that, and not too much has changed for me, which is good. Then I don't need to change my slides too much. I can do an update on things, and then but I think we talked about the Kondratieff winter last time, and I want to keep iterating this because this is how I see things. I always start out by looking at the bigger picture, understanding where are we in before looking into the charts, where are we in the very big picture, because that will tell us something about the mega trends, about the things that are really influential when it comes to our trading, which we might not identify during the on a daily basis, but on a longer term perspectives, they will be driving a lot of the price action.
Can I ask you something? Because there are so many different Elliott Wave practitioners, Henrik, that have.
Sure.
Everyone has a lot of people have different counts. I know everyone always has an alternate count. Do you believe that your view on where we are in economic winter influences what you see as far as wave counts to make it fit? And are you willing, when the structure changes, to think that we could have a break in the winter for a period of time? I'm just curious if your overall view of deflation at times influences your wave counts.
Well, it does. I mean, that's how my whole model has been constructed.
That's fine.
I mean, that's the way it has been constructed. So it starts by understanding on a very big picture, where are we in? Are we in the autumn? Are we in the winter? Where are we? So for quite some time we will be in the winter, and we'll still be there for quite a number of years. Sorry.
If I may, sorry, Henrik. I also have a question. I'm not very familiar with Kondratieff's cycle. I know that it's a 54-year cycle, if I remember right.
So 70.
You can't put an exact year to it. I mean, it can be. There is a time span to it. So, but it's based on swings, so long-term perspective, and 54 would be too precise.
In the books, whenever I've come across it, they describe it as a 54-year cycle. So that created my question, actually, that if it's a 54-year cycle that I remember, how come only 1/4 of it, the winter, is at 20, potentially, from what I see here you have in the chart, 2000 to 2022, so that's 22 years, which is almost half of what I had in mind. That was the total length of the cycle.
But I haven't the 54 years. I don't know which book that comes from. I've seen 70, I've seen 80, I've seen a lot of things here, and I don't think we should
70.
put too much. Yeah, I don't think we should put too much emphasis on the particular number for the amount of years. What is important is the different characteristics that you have during the winter. So we cannot consider it as something which is just going to last for a short amount of time. What is the main characteristic during the winter is the buildup of debt and the problem that creates in the long-term perspective, and that the winter is not going to end before you see a resolution to the whole debt level. And that's why everybody tells me, well, we're on the other side of this. No, we're not. I don't think so. We are in the middle of the winter. We'll have one more deflationary bust caused by the huge amount of debt, and we're going to see other deflationary events unfold during that. We're going to see another currency crisis unfolding to other areas than what we have today. I don't think we have seen the yields yet as at the extreme lows that we need to see it. I'm a bull on the TLT and other safe haven bonds. We haven't seen the pension fund crisis that we're going to experience also. And you remember 2 years back, I predicted trade war, and people told me I was, crazy. I'm saying we're going to have a major pension fund crisis as well.
You did, Henrik.
Yeah, sorry.
You did.
Yeah.
I'm just verifying. I remember.
And then we're going to see also, as I said, pension fund crisis. We're going to see eventually also the run from paper money to gold and currency death. I mean, that's not too difficult to think of if we look at what's unfortunately happened in different places in the world, like Venezuela and places. But it will also come to more developed markets as I see it. And then we're going to see when we get to the end of the winter, that will be at the moment when politicians finally get their acts together and they understand that they can never drive up growth rates in the world by QE or whatever, or driving down interest rates. I mean, monetary policy.
What's your theory for having debt at record low levels? Would it be by default that occurs? Because just retiring all this debt, you would think would take decades. So how does that occur? Debt at record lows, bankruptcies, defaults.
Defaults, and you'll see also inflation running at higher levels at some point. Not now, not at this point, but at some point. Then what they will, and that's why I expect also us to see some stagflation before the winter has ended. So when it says deflation here, it's the overall picture, but we're going to see some stagflation, which is also going to inflate away a lot of some of the debt around the world. But this is how I perceive things, and I think the winter is going to last until at least a couple of more years, to 22, 25, something like that. Depends on how fast the politicians will get their acts together, because very much it's about the debt levels. And I'm seeing things, and I get into that now, where we can actually see that the whole debt situation is going to unfold. That the next part of the crisis is not a financial. It'll be a financial crisis as well. But it's not going to be a financial crisis and a sovereign debt crisis. And that is where the politicians will start to act, as I see it. But let's, should we move on, Dale? Anything else?
Sure, go ahead. Yeah, go ahead.
So these are the main conclusions. Like Churchill always said, first you tell you what you're going to tell people, and then you tell it, and then you're going to sum it up. And this is the sum up of it, by the beginning. We have not seen the end of Kondratieff's winter. We'll have one more deflationary bust, as I see it. We'll see King dollar will reign for, as I see it, coming months. I've heard people talking about years. I'm not too sure about that. We'll see all currencies will decline versus the dollar for the coming months. Oil, copper, precious metals, and commodities will drop a lot. And we'll see Europe be the epicenter of the crisis. And I think, I'm pretty sure that we have seen a top in equities, and we have a major bear market on our hands, and we'll see a major drop soon in also U.S. equities. We'll also at some point see, of course, the central banks could react to deflation, and we will see that they will be able to end the deflationary phase, and it will create some kind of bounce in the market, but that will only kick us into some a stagflationary scenario.
Any best guess as to what it will take for like the Fed to flip? Is it going to be stock market dependent, economic numbers dependent, and do you have like any kind of time window when you think that central banks will begin to react to deflation, which is mainly being driven right now by our central bank in the U.S.?
So I do think I have some kind of timetable to it, but as we also, we just talked last time around the euro dollar, which I still think is going to drop a lot. I thought it was going to, unfold a little quicker than what has been happening. I do think something, changed yesterday, to be honest, but the time window will actually have to do with the whole perspective, also why inflation and the charts that supports that. And if I could go through that, then I'll get into the perspective of how long I think it's going to last. So if we look at this, why deflation? Why do I think we're going to see deflation? Well, it starts with me looking at charts and recognizing different patterns. And one of the patterns that I see in oil is this one. It's an ending diagonal. which has 5 phases. We have 1, 2, 3, 4, 5, and we have an ABC for all the phases in the diagonal. And it'll take us down to, in this case, it'll be a C wave, which when we look at oil, because that's exactly what we have here. We have the 1, 2, 3, 4, and then we're going to see phase 5, or wave 5, which will take us below. Very often it'll shoot below the trend line. That's why my call has been consistently since, also as we spoke in August. I think we can rewind and take a look at that. I had a target below 23. I think people at that time told me it was a little crazy call. I stand by it because I think we're going to.
It was a 3 drive to a top formation, buddy.
Yeah,
that was a very good call. But yeah, nice call, bro.
Yeah. And there so I think we're going to see, this full ending diagonal here going to end up in a retest of the whole area we had back in early 2000. So below 23 for oil. And obviously, a drop like this is going to be deflationary. If we look at it from 53 to below 23, that's a deflationary move. And that's going to cause a lot of pressure on prices. So this is the kind of structure I see. Okay. If we look at copper, I look at it like this. So what we have is we have top in 2006. Then we have an A, B, C taking us down to wave A. And we have an A, B, C up to what is called an irregular correctional move, because we can see that the B wave moves higher than what we ended up in here. And then we're going to, very often, we're going to take us down to 127.2 applied from the top of wave B. And that takes me down to around 100 for copper here in this index here that I use, the future. So
looks like you have a lot of lows coming in the end of this year, early next year.
Yeah, exactly.
Okay.
Exactly.
All right.
And that's what I'm thinking. And that's exactly what I'm thinking. So I'm seeing this, going to develop quite quick soon, because we have a 1, we have a 2, maybe a potential little high here. This was prepared last week or on Sunday. So I think we're going to see some fast development really soon on copper, and it's going to be quite consistent here. And this is like with oil, as we just saw before, something that will scare the Fed, of course, because then the numbers are starting to be really, really bad when it comes to price development and things. So this is also going to cause a lot of problems for emerging markets and in Europe and places.
Do you think the Fed is on hold for the rest of the year, Henrik? They're pricing in maybe 1 now in December, but if prices are falling the way you're anticipating into the end of the year, they're sure as heck not going to tighten in December. If they're going to do it, they need to do it sooner, don't you think?
Yeah, let's remember what happened in 2007-9 crisis. So Fed actually lowered rates the first time in September 2007. Okay. And we still had a deflationary fallout until October 2008. So the things that they have done already with the QT and with rate hikes and everything is already painting the picture right now. So could they be hiking 1 more time? Sure. 2 more times? Sure. Depending on how stubborn or how steadfast they will be. But we don't necessarily need that. I mean, just standing where we are now is creating a lot of stress in the markets, and there's going to be a shortage of US dollars, and that's what's going to cause the deflationary drop that I'm seeing.
Okay, buddy. Thank you.
If we look then also in another, so I'm looking at different deflationary gauges here, and the last one that I'm looking at is also the Aussie dollar, and I think what we see here is also the same kind of thing. We have an A, we have a B, and then we're going to see what another target zone could be around the 161 here for the C wave. We had something which is a consolidation here. We broke down, and now we are on a long-term trend. We're just bouncing around here, and what I still think we're going to see is a drop down here, and the next level will be around, again, the 2000 level here for the deflationary bust. And this is quite, again, extraordinary. I again, like what I called in oil, and I said it's going to be a huge drop. The same thing is here. It's going to be a big drop for the Aussie dollar, and this is a very deflationary move. It has to do with China. It has to do with the whole trade situation in the world. We're going to see some kind of, all of a sudden break to the growth in the world, and it's going to create this kind of developments.
Okay.
So, again, coming back to your question, if I'm seeing some kind of time perspective, yes, I think we're going to see this develop into late 2019, and then you'll have the financial markets will maybe sniff it up a little sooner that things are going to change, and you're going to have the real economy, slump a little longer than that. But we also have to remember that when I'm saying that we're going to have a deflationary phase first, and then we're going to see a stagflationary phase, this also plays together with this, because when we see that commodities will bottom out around late 2019 or early 2020, that's when price levels, and that's when we get into the whole new inflationary scenario. That's when I see that the secular inflation will start bottoming out. And that's when central banks will start getting a real surprise to them when they say, oh, where did the inflation go? We have been printing all this money and we could do that without inflation showing up. Well, that's because we've been in the winter. And when we start to get into the early spring, real times come back to the central banks, and printing money will not be something you can do during this, the Kondratieff spring. So this is something, we have to bear in mind as well when we think of the central banks, and they will be not as omnipotent as they have been trying.
So we only have about a year and a half left of winter.
Sorry. No, actually, I think it can last for some more years. It depends on when as soon as as I said, the politician gets their act together. Because what can happen during the winter is that you can have a stagflationary period in the winter.
Okay.
Right. And that's probably what we're going to see for some part of the winter.
Okay.
As I said, we got an asymmetrical situation in Europe. We got now we know the ECB have stopped their purchases, and we've seen a topping pattern here in the Italian 10 years, and what we have a bullish pattern in the German there's a bonds, 10-year bonds, and to me that's very clear what's going to happen. We're going to see the flight to safety. So Germany, the Nordic countries, Netherlands, and other places will be considered safe places and safe havens, and we will have the again, unfortunately, a situation where the southern part of Europe is going to be struggling, and we're going to see rising rates there, and probably also some difficulties and that's probably also why we could see some of the sovereign debt crisis play out in Europe, unfortunately.
Okay, the sovereign debt crisis won't be in Germany. It'll be in Southern Europe that has more fiscal problems, and Germany is kind of the safe haven flight to quality for Europe.
That's what I see. I don't think it's going to be any.
So will Spain and France be in the camp of Italy?
Very good question.
France,
yes,
France is kind of unwinding, and it's exactly. It's bigger than Italy.
Exactly. We could hope it's not going to look to be that. But I don't know. I haven't checked the charts on France, to be honest.
Okay,
but we could definitely have that. And the situation is, and this is why I put in a tweet this morning also, as long as the euro is misconstructed as it is, we will have this crisis re-emerging in Europe, because you will have Germany, which consistently will have, if you look in a two country kind of environment, so Germany will consistently have higher productivity level increases per year than Italy or that needs a valve. You need some kind of valve, or you'll have a crisis, returning, and that needs to be constructed at some point if they want the euro to survive.
Okay, je ne sais pas.
And what you probably also remember, I've been bullish the dollar, and I'm still bullish the dollar.
Okay, what do you think of today's action? I know you're not short term, but I actually thought we had a breakdown in euro, and here it is up in the bear's face today. So just curious.
Dead cat bounce. I mean, what we saw yesterday, I think it was some serious breakout we saw there, and I'm just curious to get back to the charts to see if we get a follow through today later on in trading. Not yet.
Yeah. Okay.
But let's see a little later. Yeah. But I think I don't buy into this that the dollar is going to weaken or something. This is going to be a very, very strong bull for the coming weeks and months, and King Dollar will take no prisoners here. So it's about not being short the dollar here, as I see it.
Okay, and you're looking for 107.
107, and probably also like here again, because of the structure of it, we can have an overshooting of the trend line, so it'll be 107 and 110. And what I think is going to happen there is simply that the Fed will re-enter, and that's also back to the timing perspective. That will be the moment where the Fed cannot look above, or that the whole world will be in a lot of trouble, and the shortage of dollars is something they'll have to address, because the U.S. will also be hit by the slowdown, and to a larger degree. So yes, at some point they will have to.
Multinational that has to export with a 90-cent euro. Isn't that your target?
Yes, it is, and I think it's right here. Yeah, it is. So that also, that's the same as been all the time. There are many indicators from this chart that 0.9 area is important, and we're going to revisit that again. It's the area from 2001. I also, if you just think of that with oil and with copper and the rest of it, it's like we've come full circle. It's like the whole phase of blowing up the asset prices and things will come full circle as they're being as we get into the later phase of the Kondratieff winter. But if you look at this, there are if you look at the two vertical lines there, which indicate that if you have a topping pattern and you break down as we did in 2014, you will have a target around 0.9. We have the trend lines, we have the count, we have got a lot of things. We also have the ABC correction, the green ABC, which also indicating this area. So 0.9 is something we're going to reach. I think, again, it's something we're going to reach during 2019. I was more optimistic, thought it was going to develop much quicker last year, but it didn't. But the consolidation we're seeing now has been long, and it's probably going to point to a very strong move down when we start to see that unfold. So I'll stick to my perspectives here and see and say call for the 0.9 area, maybe lower, maybe even lower.
Okay.
Maybe down to
that was the V, the white C and the green C. Is that what it means? Even potentially lower levels?
No, that's because you have to count. You have 1, 2, 3, 4, 5, and you have the wave 4 out here. Then green 5, and then you have an A, B, and then you have a C, which develops in 5 phases down. So this is the C here, and the A, B, and C will be it. Okay. So, but it means it can also undershoot this trend line here, which will be likely, and we can go down as low as 0.83 for the euro, as I see it also.
Okay. That would be near that's a historic low.
Yeah.
Down there in 2000. Okay.
And again, with the crisis in Europe, originating in Europe, I mean, that's very much in the cards. And then we talk, if you look at the dollar, I mean, against all your currencies, what we see here is a monthly for the dollar yen. And, we've seen a decline in dollar yen for for many years. And what we're going to see is simply just, in a very long perspective, it is simply just a correction on the move down, but it's going to be quite a correction. And I think it would take us to 154-ish area, which is simply given by an A move up. Then we've seen a triangle here, which is an A, B, C, D, E. We had the undershooting of the trend line, which is very characteristical for an E move. Then we're going to see, of course, we can have some.
The flash crash put in the low. We could correct back into that. Let me ask you this. How do you square 154 yen with being bullish bonds?
That's because you're saying that that yen will be a safe haven, yeah, but if you look at that in a very long perspective, you'll see that's not really the case. It's something, it's a paradigm that some people start to, but you've seen many times just after, I think it was in 2001 to 3 timeline, you will see that that's not really the case. So I don't live by these paradigms, to be honest.
Correlations work till they stop. So a lot of people are going to be going, the bonds are going down. Why isn't the bonds are going up, yields are going down? Why isn't US dollar yen going down? For a while, that could, a lot of people are going to say, that's a correlation. Okay.
But I don't buy into, and you will see that if you look at it, it's very, very simple to observe that there have been long periods of time where these kind of correlations haven't worked, and I think it's just going to be another one. And the thing is, I look more at the structures of the development of price development than I look to all the correlations that are not really holding up. And this is clearly B wave that we got here. I mean, it couldn't be hardly be clearer with a triangle like this. It's a triangle or it's a wave 4, and I hardly can see it's a wave 4. So it's a B wave. I think.
So then the correlation will break down between bonds and U.S. dollar yen, but I'm assuming that this move in the yen is going to be the other correlation. Maybe it doesn't break down. Is going to be pressure on gold with U.S. dollar yen going up. Will that correlation hold?
Yeah, I think so.
How do we know which one to choose?
Well, I mean, that's where I look to the structures of the graphs. I have a multi-market model which has been calibrated between the different markets, so that you will have, if you look at it from an inflationary deflationary kind of understanding, well, then it's calibrated across, and there are some correlations that will be broken up at times, which is also what we have seen, but there are also some that will hold. So that's how I see it.
Okay.
I got a few more charts. I got for the S&P, and what I think here is important. We talked about last time in August that we would see the high at some point. I think we have. My forecast to this is that we are now in a very, very big. This is a major top, wave 5 here. We're going to see a deflationary move, which is the whole deflationary story I've just been talking about here, taking us down to around 1900 for the S&P. And I know, so people say, nah, but we're bouncing here and we might see new highs. I don't believe in that. I think we're in a new regime, economic regime. We're seeing net liquidity in the world going down or being negative. And we are in a kind of a 2008 environment, Q1, Q3, 2008, where the net liquidity is decreasing, and that's really going to cause a lot of problems. So I see the A down in a very long perspective, because that's what you will see. A B up after Fed react, and then we're probably going to see the next phase will be a stagflationary phase. But let's talk about that when we get back on in 2020 or 21. It'll take a little time.
Okay.
But the deflationary part is going to unfold until at least late this year, I think. And 1900 will be the area where I'll start to looking for a bounce from the wave A.
And it'll feel terrible, but I mean, compared to the crisis in 2008, 9, and 2000, it's still not really terrible levels. I mean, 1500 was a double top breakout. You think eventually that's where we'll get to after a big bounce, but it's not like some of the super bears, Henrik, are talking, us taking out the 09 lows and stuff.
Well, I could have drawn that in as well. I'm not sure about that. We'll have to look at it when we get to there, but I'm quite sure that 1500 as a minimum is what we're going to get to by the end of the winter, of the Kondratieff winter.
So some Ellioticians are saying that this is not 5 of 5, it's 5 of 3. We get a pullback for 4 and then new highs.
Yeah, and I think as you said, you have got many counts out there, and I think it's about pulling all the pieces together, not doing counts on just a single chart. If you do a count on a single chart, or even worse for a time span of 100 days or something like that, it's not credible. Simply, you need to do it in a very long time perspective. You need to have the multi-market perspective, inter-market perspective. If you do not have that, and also pair it up with understanding of macros, because if you don't do that, I don't think Elliott waves will allow you to make a lot of mistakes, and a C wave can be mistaken for an impulse wave up and things like that. So, it's very difficult to call it if you do like that. So I don't trust all that. What I see are some very good ones that I look to, but I think it's some of them are mistaken, to be honest.
Okay.
We
all are mistaken at times, aren't we?
Oh yeah, we are definitely.
Okay.
DAX, very, very tough on the DAX and then on Europe. I think we're going to see, and that's also what the bigger perspective calls for, that after this major downturn that I think we're going to see a significant bottom in Europe. So when everything has been sorted out by Kondratieff, end of Kondratieff's winter, Europe will be the place to invest. But I would not invest in Europe at these times. I think it'll be a very bad place to be. So So that's going to be causing a lot of trouble, unfortunately, and a lot of problems like what we see already with yellow vest and things like that, where people will be scrambling or will be demonstrating against the establishment, which you can understand.
Do you think things will be better in the U.S. As far as social unrest during this economic winter? You live where again, Henrik?
Denmark, Copenhagen.
Okay, so you feel comfortable there with what might happen in Europe as far as it being a okay place to ride the storm out?
Yeah, I think Denmark and the northern countries will be okay. The Nordic countries will be okay. And I don't want to be mega bear. I'm just saying that we can see already things developing. Yeah, but it's when you start to see, if you look at things in Italy, for instance, where you have youth employment at the levels that you've had for so many years, and this has been through the good times.
Yeah, good point.
That's terrible to see. And if I was in that situation, I know what I would have done. If I had to live with my parents at age of 35 and couldn't get a job, I would also be revolting at some point. So I think it's terrible for what the euro is doing to Europe these days.
Yeah, I don't know why they ever called 2008, 2009 the Great Recession, because it really wasn't great for anybody except the banks.
Exactly, except for the banks and for panic around there. But this is going to be, as we said, the sovereign debt crisis, I think, and it's going to be felt across many countries, unfortunately. So what else do we have?
Before you get to gold, can we have a sovereign debt crisis with negative interest rates in Europe?
Sure. I think
what's a crisis then? The bonds are being bought, right, for safety. I would think the crisis would be not being able to sell bonds, sovereign debt, not being able to sell it.
It depends on which country you're looking at. I think look at Italy the coming months and see how much bid there'll be at their bond auction.
Okay.
I mean, wasn't that what we saw in the topping pattern for the bonds? I think you'll put your money where the safety is the greatest, and you'll probably put it into. I mean, Denmark has zero, foreign debt, zero, and we have a balanced budget, and we have that every year, and we have a welfare state which is quite expensive. We pay a lot of tax, but we got a social contract which is intact. And so people will be investing here, and you can get on real estate bonds. You can get a good mortgage bonds, it's called. Sorry, you can get a good yield. So why not? And that's why I think you'll see a divergence between where you look to whether it's Southern Europe or Northern Europe.
You need a roommate?
Sure. You can come look at it anytime.
All right, buddy.
I'm not sure my wife will agree though, but anyway, you can come.
Well, I'll be like your grandfather. So,
great.
Okay, let's wrap it with gold.
I got something I go. And first, I want to tell everybody who thinks I'm the greatest bear that I'm actually the greatest bull when it comes to gold. But it's just a matter of timing. And if you look at this in constant US dollars, 90-20 US dollars, I think we're going to. We normally see during the winter and during the summer phase that by the end of these, that gold reaches an absolute peak, and it will probably be in a major bubble at that time. But we are still 4 to 6 years away from the end of the winter, and that's why I think we're going to see a bottom first in gold, and I'll just come back to that on the next page, and then a very, very significant top at lasting the rally lasting a couple of years or 3 to 4 years, and even with stagflation, that will be the perfect environment for gold to develop. So that's what I see.
Will silver outperform or lag? Just your gut.
Outperform.
Okay.
By far.
Poor man's gold. So because we've already seen a little change of trend in the gold silver ratio. That's why I was asking you.
Yeah. Again, these are the All right. And what we can look at and why I'm still a bear on gold is that I understand all the narrative that's coming out, but also I think it's simply a misunderstanding. And if you look at the Q1, Q3 scenario back in 2008, where gold and S&P dropped together. I mean, people telling you when you get a crisis, people move their money out of stocks and into gold. Well, that's not what we see. We see that we have to understand that there are different regimes, and one of the regimes is a deflationary regime where liquidity is everything. And really, what gold does in that phase is really living up to its responsibility, which is provide liquidity by when you know the shit hits the fan, and that's what it does when central banks has to sell it off to be able to actually get the liquidity for, you know, in the shortage of dollars.
You know, so, maybe a recent example of that was a lot of people suspected on the washout to 1160 was when the Turkish lira was in crisis, and possibly it was the Central Bank of Turkey that dumped a lot of gold when we were down $40 that day. So you're right. During a liquidity crisis, people sell the kitchen sink to raise cash, and gold will fall victim to it. So
technically, we are this. Sorry,
go ahead. No, go ahead.
Technically, I look at this as also an ABC pattern, and that is the correctional. We are in a major bull market for gold, which started in 1999, and now we are in an ABC correctional phase where we are right at the wave 2. I think, you know, the yellow spot there in wave C, and the next phase down will be where, you know, the wave 3, and I'll just show it here how it looks. So we had the top in 2011. We have an A with 5 phases down. We have an A, B, C. Then we had a 1, a 2, and now we're just hitting, you know, back testing the small triangle. And the next thing we're going to see is a very strong move down, which is, you know, equally strong as what we saw back in 2012 and 13, and equally strong to what we saw back in 2008. You know, the rate of the decline. So, and it's not, again, as you said, you sell this, you know, everything you need to in order to get your you know, to get the liquidity. So that's what we're probably going to see. Will that be a good time to buy gold when we get there? Yes, it will. And that's, you know, back at the 750 or 825 area. That's where I would go really long.
Any view on miners? Do you follow them, Henrik? Because, you know, they've been underperforming gold for quite some time. You know, they have costs of production and energy costs and debt. And I think most likely only the bluest of the blue are going to be able to survive. You know, gold being 400 under production costs at the end of the year.
I completely agree, and obviously many miners will be a bargain at these level, and they will be. I hear these about, you know, they will not be. You can see gold, you know, fall below production cost levels of production cost, which is not true, because you have stock and you have flow of gold, and when stock goes, you know, starts to sell off as central banks need liquidity, you can have, you know, significantly below production costs. So you will see some of them struggle, but these are one of the things that I keep really, really close to myself. There are some, you know, fantastic opportunities when it comes to miners, and I picked a few out that I want to invest in at some point.
Okay, well, I'll pay you $5 to find out. Anyway, no, I wanted to, let me ask you this. The biggest hoarders of gold over the last several years has been China and Russia.
Yep.
And I think Iran. So I could see how Russia might be forced to sell gold if you're right about the ending diagonal in crude, right? So crude prices drop, they're going to probably have to sell gold. China is the largest hoarder. You really think the PBOC is going to dump gold during this scenario to what, protect the yuan from falling too much, or what?
No, I'm not sure it's going to be China or Russia that are going to be to force the price down. I think it'll be some of the countries which will be forced to do it as part of a debt, sovereign debt crisis.
Okay, so like Italy, and
it's going to Turkey. It could be other places. You know, there could be places there where they will have to do it simply. So I think that will force. And I don't think that, you know, the bottom is gold. In gold will not be something that lasts for many days or weeks or something. It'll be a spike. With it, days, of course, but not weeks or months. I mean, it's going to be really quick. And you can also look, if you look at it from a technical perspective, you can see could potentially look like a major bull flag that we're going to. And I do have, you know, very high levels for gold to move to when this bottom is in.
Another great presentation by Henrik Zeberg. Okay, let's go to your conclusions here, partner.
Yeah, but that's just back to what I said, you know. So bridge are not over, King Doll and all that, what we just talked about.
I tell you what, I put my gloves and earmuffs on after doing this interview. I'm freezing in here.
Anyway, take care, man.
Okay, so really, thank you so much, Henrik, for coming back, and Looks like your narrative, it's been a little delay with this bounce in gold from 1160 and Euro moving sideways, and really appreciate your conviction, right or wrong. It's great to talk to someone who believes in their work to put skin in the game on that, on those ideas. So I hope 2019 is a great year for you. Looks like being long dollars and short the world is the Henrik Zeberg financial plan.
That sounds like it, yeah. Thank you very much, Dale.
All right, well, good hunting, my trading warrior brother. Thanks again for being with us and cheering us up on a Friday into the weekend. All right,
you.
But you know what? Better to know, or at least think about these things, than to have your head in the sand. So really, I enjoyed our conversation today, Henrik. Have a great weekend, buddy.
Thank you.
All right.
Cheers. Bye.
Yeah, okay, everyone, you're welcome. Tom, are you still there, Henrik? I had a question.
Yes, I'm here.
Any view on Bitcoin from the audience?
Yeah, I do. I think there might, what I see technically is that Bitcoin is not dropping like we would expect if it was a real crash. What I see is something that is correcting. However, when you see something that is, flying to the moon like what we saw, it is something that is going to correct very deeply. So I had the around 2000 target for some time where I would be looking at it. But I think that target could maybe the entry target could be around 100 or something like that. There are different places where I would start looking at it, because obviously if there will be a runaway from paper currencies, Bitcoin might shine again. I'm not sure it will, but it could.
Okay. Thanks for that, buddy. And that's a wrap for us here in F.A.C E. Everyone have a great weekend. Remember, don't just count your pips, count your blessings. Adios. See everyone Monday. Thanks again, Henrik. The video will be out in a couple hours.